take the perennially dull, proper, and ho-hum world of bond investing and infuse it with some pizzazz? I have no idea, but that doesn't mean we're not going to try. Welcome to ETF Battles. I'm Ron DeLegge, and coming up on today's program, it's a showdown between two of the world's largest bond ETFs. It's the iShares Barclays 20-plus year Treasury ETF, TLT, versus the Vanguard Total Bond Market ETF, that's ticker symbol BND. In monster terms, this is like a battle between King Kong versus King Kong, both sitting atop the Empire State Building, swinging at each other, and also swinging at any helicopters foolish enough to engage them. By total assets, BND is the larger fund. It's got around $57 billion in assets, whereas TLT's got just $19 billion. Both ETFs hold investment-grade debt, which is the highest credit quality debt that money can buy. Before I introduce our judges, just a quick reminder, keep your ETF battle requests coming. Hit us up on YouTube in our comments section. Drop us your ETF tickers and hashtag ETF Battles. You can do the same on our Twitter feed. At ETF Guide is where you find us. Let us know also how you've been enjoying the show. So helping us to judge today's face-off between TLT and BND is Dave Kreinces at ETF Portfolio Management and Mike Akins at ETF Action. Always great to catch up with you guys. Good to see you.
Good to see you, Ron.
Hey, Ron.
So the four battle categories between TLT and BND are cost, yield, performance, and then the mystery category where you, the judges, get to pick that single factor or multiple factors that you think are important, and that mystery category could end up deciding which of these two ETFs wins today's battle. So my scorecard, as you can see there, is blank. That means it's ready to go, and I'm going to fill it out in real time. We're going to go through each one of these battle categories one at a time. Each of our judges is going to have 30 seconds to give their analysis and their pick. They can choose TLT or BND as the winner in each respective category. They can also opt for a split decision. And then, of course, at the end of the show, we'll declare a final overall winner. So let's begin with the first battle category. It's cost. Mike, you've got 30 seconds. Go.
Well, here you go again. You're putting a Vanguard fund in there and you're asking me to judge costs. So I'm just going to go ahead and say that BND is cheaper, but I'll add a little more to that. Not only is it 4 basis points versus 15 basis points in management fee, but also BND is a broader product. It's going to get you access to different types of areas of the market. TLT is a pure treasury product. So you're getting diversification within the fixed income area across multiple different areas. It's an aggregate product versus just a purely treasury. So BND on multiple factors is my cost winner.
All right, that's a good start. Thank you, Mike. Let's shift to you, Dave. Who wins the battle on cost between these two ETFs?
Hey, Ron, before I talk cost, I just want to say I'm super excited for this battle. Understanding bonds is really critical for investors to understand the real protection in their portfolio. And in full disclosure, we do trade TLT, the 3 times levered TMF, and we do not trade BND. But as far as cost goes, the expense ratio of 0.15% for TLT versus 0.035 for the total bond market leaves TLT at more than 5 times the cost of BND. But long-term treasuries provide much better protection. So even at almost 5 times the cost, I still give the win on cost to long-term treasuries, as surprising as that sounds, because while they're both bond funds, you're paying for very different things here.
All right. That was shocking. But again, that's what we sometimes get on the show, and it's also what our audience needs to hear. So thank you, Dave, for your analysis on that. We need to move to the next battle category, which is yield. This is important for bond investors because they're always concerned with maximizing their cash flow. So let's stick with you, Dave. Who wins the battle on yield between these two ETFs?
So this might be another surprise. For yield, it's a low yield world. And these bond funds are in the 1% to 2% neighborhood. I always say that yield is just one component in total return, and it's not a critical factor. The concept of focusing on bonds primarily for their crash protection first came to me through Yale CIO David Swenson's book, Unconventional Success, back in '05, when Swenson favored other Treasury bond ETFs and noted their selection was for protection over yield or total return. So BND does win on yield for whatever that's worth.
So BND wins on yield. Thank you. And also the reference to the investing great David Swenson. What a great book. And David Swenson, by the way, makes an appearance in my own book, Habits of the Investing Greats. It's available at Amazon.com. I didn't think I would get a chance to plug that. So thank you very much for helping me do that, Dave. Let's shift to you, Mike. Yield, who wins the battle?
BND is going to get you more yield for more risk. But I think one has to ask themselves what exactly yield means in the current world we live in. Nothing's going to outpace inflation at this point, neither one of these products. I would give it to BND because it's getting into other types of bond securities outside of the Treasury market, but just with the asterisk that neither one of these products really should be thought of as yield purchase right now. It's more about protection of your portfolio or diversification of your portfolio. And I think we'll get into it a little bit more when we talk about performance, but understand that there's an idea of convexity with respect to duration and how it plays into your portfolio. And BND is going to be much more, or a lot less duration risk with respect to the movement in the yield curve. So if yields do start going up, TLT can move very quickly down. Dave talks about it as more protection, and he's using it with a very sophisticated strategy to capture the high risk he's taking when markets go up. And it provides that exposure he wants. But from a broad exposure perspective, BND is going to have a much smoother ride if interest rates start jogging up. They'll both, obviously, interest rates rising would be negative for both products, but it'll be significantly worse for TLT.
Okay.
So yield to bond to BND, both for the fact that it's an absolute higher yield, but also because it has better diversification.
Very good. And just to confirm, Dave, because you threw me off with David Swenson, I wasn't expecting that. I mean, that came out of left field. Just to confirm, for yield, you chose BND. Is that correct?
Correct. Yes.
All right. I just wanted to make sure, because when you threw out David Swenson, man, you just got me so excited that my head was blown up, and I
just wish Swenson had picked long-term treasuries.
Yeah, well, I remember that book. He mentioned tips. But I have to reread it.
Medium-term treasuries, but yes, long-term treasuries were the call for sure.
All right, let's move to performance, and let's stick with you, Mike. Who wins the battle on performance between TLT and BND?
Well, TLT is crushing pretty much everything because of the duration risk I just spoke of. So I'll give it to TLT. It's provided, as Dave said, much better protection in the last two market meltdowns that we've had, both in the Christmas sell-off in 2018, as well as obviously the COVID sell-off recently. As yields fall, that 20-year plus Treasury duration is going to give you that protection. And that's the world we've been in. We have been in a falling rate world for most of my life and all of my adult life. So TLT has crushed it in that time frame, and there's just no arguing it.
Excellent. Let's move to you, Dave. Who wins on performance, TLT or BND?
So on performance, your bond holdings are most important for protection when stocks crash. In 2008, 2011, and again this year, long-term treasuries were the best bonds to own when protection was needed most. Year to date, through July 21st, TLT is up 25% and BND is up just 8%. In addition, TLT strongly outperformed in total return. Over the past decade, long-term treasuries delivered 117%, or 8% annualized, which was over 2.5 times the bond market return. In fact, TLT is so amazing, I'm going to throw an ETF battle wildcard and bring in an outside ETF because the 3 times leveraged long-term treasury symbol TMF gained 310% this past decade, which even beat the S&P 500. And TMF is also currently up 68% year to date. Now, BND was much lower risk. The worst recent calendar year for BND was down 2%, while TLT fell 22%, and TMF lost over 40% in its worst calendar year. Still, overall, TLT and TMF were far better securities to pair with stocks. So I give the performance win to TLT and TMF.
And thank you for that wild card for our audience, TMF. It's called wild card because it's wild, and it was so wild that it threw me off. But it's something that that has been known to occur on this show many times. So thank you, Dave. Let's move to the mystery category, and this is where our judges get to pick their factor or several factors that they feel are important to the analysis of this particular battle. Let's stick with you, Dave. What's your mystery category and who's the winner?
Well, for mystery category, you know I love portfolio weighting. It's a critical component for any investment. TLT is a position we often weight anywhere from 30 to 100% of a portfolio at times, while BND we just don't use at all. And TMF is a core holding in our leverage strategies, and we typically cap TMF exposure at a maximum of 60%. So I give the win on portfolio weighting to TLT and TMF for the 3 times leverage version.
All right, thank you. Let's shift to you, Mike. Who is your mystery category winner, and what is your mystery category?
Well, I would just say my mystery category is, do you believe we can go lower when it comes to yields? That's really where you're going at with this trade. TLT is basically, we're setting at just shy of 100 basis points in the longer term yield market. And if you believe we can go into a negative world like Europe or some of the other developed countries around there, TLT is going to continue to provide that protection when the market crashes. So you've got some good juice there to an extent, but you have to ask yourself if yields start to rise, a lot of that 25% year-to-date performance that Dave spoke of can unwind quickly. So the question is how you're using the product and how it relates to where yields are going. So I would just say, keep in mind, duration is a very big deal with these products. And if you're looking for diversification into fixed income, owning just long duration is not how I'd get it done. So I'm going to give my mystery category winner to BND for diversification, lower duration in this current environment, but fully concede to my battle partner that when things get ugly, yields generally fall. It's not always, but generally fall, and that provides great protection to your portfolio.
All right, very good. So let's recap your overall battle winner. Let's stick with you, Mike. Between TLT and BND, who is your overall winner?
BND all day long for the vast majority of investors because it's a great diversification tool. It's a great allocation tool to put in your portfolio to get you some of that if you're doing a 60-40 portfolio or whatever it may be. Whereas TLT, very effective in owning those long-term treasuries, but it's got to be done with an eye of a forecast, what you believe is going to happen or how you're using it in conjunction with the overall portfolio. So I'm going to give it to BND.
Thank you very much. Let's shift to you, Dave. This is your final chance to weigh in. Who is your overall battle winner?
So to recap, in our research and experience, the right bonds are critical for portfolio protection, and they can enable you to maintain far more exposure to stocks at times, which can be priceless. Our new book called Investable Benchmarks explains how to use TLT and TMF in strategically balanced portfolios with or without leverage. So I give the battle win to TLT and TMF for far superior portfolio protection and total return.
All right. Well, the judges have spoken. Thank you for weighing in, which are usually excellent and thorough analysis. And so according to my battle scorecard, I'm going to have to score this as a split decision. Our judges agreed on yield, they agreed on performance, but everything else they disagreed on. And they also disagreed on the overall battle winner. And so I think the key takeaway from today's program, a couple of things. First of all, bonds can sometimes outperform stocks. It really depends on the time period we're discussing. Also, owning bond ETFs is an easy way to obtain diversification. And also, why are we owning certain bond ETFs? Is it for protection or is it to get core exposure to the asset class? So that's another consideration. And then lastly, while bond ETFs won't provide you with complete principal protection, they have nonetheless been successful as hedges during declining stock markets. So a lot of good information has been thrown out there on today's program. And if you're looking for bond ETFs, hopefully some of the points that our judges brought up will give you some things to think about and at least a starting point for further research. A big thanks again to Dave and Mike for an excellent job judging today's matchup. So which ETF battles would you like to see on our next episode? Hit us up in our YouTube comment section. Give us your ticker symbols. You can also find us on Twitter at ETF Guide. Be sure to hashtag ETF Battles. And until next time, watch the ETF battle before you invest right here on ETF Guide TV.